Right.
All right, ladies and gentlemen, welcome back to the room. Uh, in 20 minutes, give us the highlight of your paper. You can start your screen, unmute yourselves, and start your presentation. Share your screen, okay? Your time starts now. Go ahead, please.
Right. So, good evening, Dr. Ahmed and Dr. Chu. So, we'll be presenting our new thesis proposal topic, which is an analysis on the impact of oil price shocks on the stock market index of the ASEAN 4 countries from the year January 12 to October 2022. So for our introduction, so a little bit of background. So petroleum plays a big role in the economy and in the business, and a lot of businesses really rely heavily on petroleum for their day-to-day operations. And the government is also using these petroleums as a source of to generate power, to generate energy, and we ourselves we also benefit from petroleum in fueling our gas. So when the price of oil goes up, it will cause a decrease in the production for the company, which will lead to a increase in price, which can then later on affect the movement of the stock market. So the stock market index is used to measure the industry and the companies and the market capitalization. And then there are also some studies, so like Sacharon, Zorabi, and Nitam, and Wu. So they have studied that the impact of oil price shocks will be based on the consumption of certain country. And then another study by Le and Du, which they studied the impact in importing and exporting countries, which they found out that oil price shocks have a positive impact for exporting countries and negative impact for importing countries. And then, according to Kumar, the Russia and Ukraine war, which really triggered the rise of a lot of prices, and one of which is the price of oil, which we were able to experience last year. So adapting the study of Zhang and Wood, this study will focus on the oil price shocks on the stock market of the ASEAN 4 countries. So the ASEAN 4 countries are Malaysia, Indonesia, Philippines, and Thailand. Malaysia and Indonesia are known as a country that exports oil, and the Philippines and Thailand are known for importing oil. So 6 and 9% of the revenue of Malaysia and Indonesia are coming from the exporting of oil, and then Philippines is consuming 1/3 oil as much as Thailand. And then lastly is adopting the framework for structural shocks by Killian and Park 2009. So there are three structural shocks for oil. We have the oil supply shocks, which refers to the global crude oil supply. Aggregate demand is the shift of demand for industrial goods. And then lastly is the oil specific demand shock. We can also call this the precautionary demand, where countries buy oil just for safety if in case there's a shortage of supply in the future. So for the statement of the problem, so we want to know what's the performance of the crude oil for the 2012 to 2022, and then what's the performance of the stock prices for the ASEAN 4 countries during the year also. And then we also want to know, is there an impact on the stock market for the ASEAN 4 countries with these three structural shocks, which is oil supply shocks, aggregate demand shocks, and oil specific demand shocks. And then lastly, we want we're also questioning is what are the impacts of oil price shocks on the market when it's in a bear market or in a bull market. So for the objective of the study, so we want to identify the performance of the crude oil for 2012 to 2022. We also want to know the stock prices for the ASEAN 4 countries during that year, and then to identify the impacts of the structural shocks on the stock market for the ASEAN 4 countries, and also to identify the impact of oil price shocks during bear market and bull market.
And now for the statement of the hypothesis. Since there are three indicated structural shocks given in the study, it was also necessary to make a corresponding hypothesis for each of those given structural shocks. Starting with the first is that oil supply shocks indicates that there is no impact between oil supply oil supply shocks and the CN4 countries. And next is the aggregate demand shocks, which indicates that there is no impact between the aggregate demand shocks and the CN4 countries. And and lastly is the oil specific demand shocks, which also indicates that there's no impact between oil specific demand shocks and with the same ASEAN 4 countries. Next slide, please. And moving on now with the bear and bullish regime, since there are two separate conditions of the market, it was also necessary to implement them with our with our hypothesis. And it also starts with the oil supply shocks, which indicates that there is no impact of oil supply shocks in, and the ASEAN 4 market during the bearish and bullet market. And next one is aggregate demand shocks, which also indicates that there is no that which indicates that there is no aggregate demand shocks impact of aggregate demand shocks and the CN4 market during the bearish and bullish market. And lastly is the oil specific demand shocks, which also implements the same hypothesis.
So moving on to the significance of the studies, these are the groups that may be given aid by the study based on its data and findings. First is oil and petroleum industry, second investors, policymakers in the stock market sectors, researchers in the academe, and lastly, the future researchers. Next slide, please.
So for the scope and limitations, the study will focus on the impact of oil price shocks, specifically the oil supply shock, aggregate demand shock, and oil-specific demand shock on the ASEAN 4 countries. Several related literature already discussed the impacts of oil price shocks on G7 and Asian countries. So the study will also cover the indices for the ASEAN 4 countries, and we included 10 companies each from the 4 stock exchange that are listed on their stock exchange from January 2022 to October 2022. And the statistical tools that will be used are descriptive statistics, which will give an overview of the stock market indices, and structural vector autoregression to capture the oil price shocks and their effect on the stock market. So the independent variables that will be used are the structural shocks, specifically the oil supply shocks, aggregate demand shocks, and oil-specific demand shocks, while the dependent variables are the ASEAN 4 stock market and stock market index. Next slide. So here are the 10 companies from the Philippine Stock Exchange in no particular order. Next slide. Here are the companies from Bursa Malaysia. Next slide. Here are the Indonesian companies. We also picked 10. Next slide. And lastly, here are the companies from the Thailand Stock Exchange. Next slide.
So for chapter 2, which is the review of related literatures. So first, impact of oil price shocks on the stock market. So study by McKinney, so he studied the impact of oil price shocks for exporting and importing countries, and he concluded that the impact will still the countries will react to the impact depending on which type of shocks by the oil. Second is Ben Bachir Harit and Krabi, so analyzes the impact of oil price shocks for MENA countries. So they were able to find that some countries have a longer impact and some don't. And then at the end, it still states that the stock will still depend whether will still depend whether the country is an importing or exporting country. For Le and Du, so they studied the crude oil market for Asian countries. So they wanted to know what's the impact on for exporting and importing countries, and they were able to find out the degree of impact will be depending on how big the country is in terms of exporting or importing oil. So they've concluded that there's a positive impact in the stock market for exporting countries, while a negative impact for importing countries.
So Wang and Kim evaluated the impact of oil price shocks in the US stock market. And they also identified how the oil price of oil affects the four high consuming energy factors, specifically the petroleum and natural gas industry, the chemicals industry, the automobile and truck industry, and lastly, the retail industry. They also stated that oil price significantly affects high energy consuming sectors, and the impact of oil price shocks in the stock market will depend on the type of shock. Lastly, demand-driven shocks have a bigger and long-lasting effect on U.S. stock returns, particularly when economic activity is on a downward trend. Next slide. So Zhang and Zhu investigated how oil price shocks impact the stock market liquidity in China. Their findings also show that stock market liquidity only increases when the oil price shocks come from the oil-specific demand side, while it has a negative impact on oil prices when the oil price shocks are caused by the oil supply side or the agri demand side. They also used panel regressions to find out the micro-level evidence for the relationship between oil price shocks and stock market liquidity. Next slide.
So next is the impact of oil price shocks on bear and bull markets. For Zhang and Liu, when the stock market is in a bear market, oil price shocks have a greater impact on overall stock returns. Next slide, please. The same with Sadeghi and Rodari's point in their study. In addition, they showed that in the bull market, oil demand shocks continue to have a medium and long-term impact on stock prices. However, in the bear market, these shocks only had a short-term impact. Next slide, please. And lastly, for Zhu, Su, Yu, and Ren, it is discovered that oil supply and demand shocks have no or little effect on stock returns in a low volatility market, but they do have an impact that is statistically significant in a high market. Moreover, oil supply shocks have a much smaller impact on stock returns than do oil demand shocks, while a positive oil-specific demand shock dramatically lowers market returns. A positive aggregated demand shock sharply boosts stock returns. Next slide, please.
So for structural shocks, so first we have Wee studied the impact of oil price shocks on ASEAN countries. So he was able to find out that the only shocks that can impact the stock market is the oil-specific demand shock. So stock prices of East Asia markets typically rise when oil prices rise due to an unexpectedly favorable global demand shock. So when there is a negative supply shock, it has no impact for Indonesia and Malaysia, but has an impact on Philippines, Singapore, and Thailand. Next is Nadal, Cislo, and Lucena. So they use the DCC Gorge model to analyze the oil and demand shock. So there is a positive. What they found out is that there's a positive impact of demand and precautionary shock on the stock market return from 2007 to 2008, and oil supply shock had a little impact on the returns of the stock. So for Marash and Fandi, so they found so they stated that the impact will not only depend whether it's coming from a demand side or a supply side, but it should also be taken to it should also take into consideration that whether the country is exporting or importing country. So they found out that shocks coming from the demand side are producing positive impact for both importing and exporting countries. So but supply side are producing contradictory impacts for importing countries and ambiguous impact on exporting countries.
For Xiaobu, Li Sheng, Tu, and Kiang, they made an investigation about the effects of the oil price shocks on stock market anomalies, and they would discover that there are or oil supply shocks and oil specific demand shocks that provide a large impact on a few anomalies, whereas compared to the agri demand shocks, they have a significant impact on numerous stock market anomalies. And in and during that study, they demonstrated that all of the three oil price shocks have an effect of the total anomaly in the stock market, which in particular, in relation to some particular industries, it includes the consumables, consumer durables, retails, and oil industries, which all indicates that oil price shocks have an impact on anomalies and also in the industry level. Next slide, please.
Lee and Paul investigated the expected demand and oil supply shocks upon the stock market returns and its volatility using the time varying parameter structural vector autoregression stochastic variance to evaluate the models and identify the structural shocks. Monthly crude oil price changes, returns of major oil producing companies, the policy uncertainty index, and stock returns from January 2003 to February 2020 are used to evaluate the model. So results from the time-varying parameter structural vector autoregression variance show that expected oil demand shocks have a significant impact on stock returns and volatility, while supply shocks have no effect. Next slide. So Aram Patzaidis examined the relationship between oil prices and stock markets, and he also examined the dynamic nature of this relationship within a structural vector autoregression specification for a large set of rolling samples with a fixed size. He also stated that the impact of oil prices on the US stock market is dependent on the type and timing of the shock. His finding shows that an oil supply shock has no statistically measurable impact on the stock market. An aggregate demand shock has a positive impact on most sectors, and an oil-specific demand shock has a negative impact on stock returns in almost all industries. Next slide.
So for research gap, so according to the knowledge of the researcher, so a lot has focused on the impact of oil prices for developed countries. So there has been a lack of research on the impact of oil price shocks for the stock market on the ASEAN 4 countries. So this research hopes to help in the development of the following importing and exporting countries. So here's our literature map. And then for chapter 3, which is the framework, so we have 4 theoretical frameworks. First is the event study methodology. Event study methodology evaluates on how stock prices or securities are impacted by a certain event. Then the arbitrage pricing theory states that there's a linear relationship between assets return and many different microeconomic factors. And then the capital asset pricing model, it's explanation on how financial markets value securities, and it also estimate projected return for an investment. And then lastly is the efficient market hypothesis, which states that all the public information and new information are reflected in the stock prices.
And this is our consensual framework, which is a simple framework that demonstrates the relationship between an independent variable and the dependent variable. Next slide, please.
So for the operational framework, these are the steps consisting of the gathering data from definitive icon for the price of crude oil. And the statistical tests include descriptive statistics and structural vector autoregression models. Next slide, please.
So for our prior expectation, so for exporting countries, there is a positive impact on the stock market. Then for importing countries, there is a negative impact. Then for bear market, it has a bigger impact for oil price shocks than bullish market. And then oil supply shocks, it has a positive impact for both importing and exporting. Aggregate demand, negative impact on the stock market for both importing and exporting. And then oil specific demand shock have a negative impact on the stock market. So for chapter 4 methodology,
So for your research design, data will come from the Refinitiv Icon terminal spanning the years January 2012 to October 22, and the study will use a quantitative research approach to discover how one variable affects another. The relationship between 2 or more variables will be evaluated through statistical tests such as descriptive statistics, threshold, structural vector autoregression, unit root test, nonlinear impulse response, probability of regime switching, and nonlinear historical decomposition. Next slide. So purposive sampling will be used, and the sample will consider the stock market of the ASEAN 4 countries and the index for each of the stock index, the monthly real price series is obtained by averaging daily closing prices in each month. Next slide.
So for data gathering, like what Priya said, so all of our data are secondary data, and we will be gathering from the Infinitive item terminal. So we'll be collecting monthly data from January 12 to October 2022, and then we'll be collecting WTI crude oil, global oil production, and then economic real activity by Killian for 2009. So for data analysis, so first is the descriptive statistics. It's a brief information that summarizes a certain data set for a sample or given population. Then it also measures central tendency and variability. So second is we have the threshold structural vector autoregression. So here's the model. So for threshold structural vector autoregression, it helps analyze the impact, the nonlinear impacts of oil price shocks in the stock market. So and another thing about this is that when threshold variable passes a crucial value, it's signaling a shift of regime or a shift of market. So for our study, we'll be using the stock market as the threshold variable. So when the stock market is above the threshold value, we will consider the market as a bear market. Oh, I'm sorry, a bull market. But when it's below the threshold variable, we'll consider it as a bull market. So for structural vector autoregression, it's an important class of time series. So this model consists of collection of multi variant linear autoregression equation that capture combined dynamics of economic variables. So here's the model. So so some rationale for the identifying assumption. So all supply shocks will not respond to shocks that are derived from demand side for at least a month. Then global economic activity will not respond to shocks specifically to oil market immediately, it will be delayed. Then third is the innovations that of oil price shocks that cannot be described or determined by oil supply shocks or aggregate demand shock. We will consider it as a oil specific demand shock. And then lastly, it is assumed that all structural shocks to the oil market will have an impact on the stock market. So for the unit root test, so it's also important to test the stationary of the variable. So we'll be using two models. So model A will be based on the regression, which will allow a shift in the intercept. And then the second model, model C, will allow shifting for both the trend and the intercept. So here's the model. So according to Glenn, tests for data series sometimes are known as unit root tests. So unit root tests are one of the reasons for non-stationary time series is said to be stable if change in time does not lead to change in the distribution form.
So next is the non-linear response. We will employ impulse response analysis. The threshold model's IRF depends on the system's prior history, the size, and the sign of the shock. Next slide, please. So here's the model below and its legend. Next slide, please.
So the researchers must compute the probability of being in the bear regime given a specific oil shock and initially being in the bull regime to examine which type of oil shock is most likely to cause stock market regime shift by calculating it with this model. So the indicator function serves as the response variable in the calculation, which is similar to the nonlinear impulse response function that was just mentioned. So this is the model. Next slide. So for comparison, the probability of switching into the bear regime and the absence of a shock is also calculated with this model. Next slide.
And now lastly is the nonlinear historical decomposition that will be used with the study. And its very essence is to examine how the conditional forecast of the endogenous variable would move if in case the researchers know the right path of the shock. It will also help to assess the study and know the importance of the different oil shocks with considering the switching of bear and bull regime in the stock return and fluctuations. And next slide, please. And this is the formula for the nonlinear historical decomposition together with its following variables.
So
Thank you.
that's it for our presentation. Thank you for listening.
Excuse me. And thank you for your presentation. The question and answer portion is open now. Dr. Thomas, may I go ahead, please?
Dr. Ahmed, please go ahead.
Thank you. Okay. Actually, I have a few observations as well as recommendations in order to improve your paper. First of all, looking at your title. Your title says an analysis. Is it on or off? Grammatically. So I believe it is an analysis of the impacts of oil prices shocks on the stock market. So therefore, I would like to suggest a minor improvement to the title as follows. The impacts of oil prices shocks on the stock market index of the ASEAN 4 countries from January 2012 to October 2022, an analysis. I will be sharing with you my recommendation with the approval of my colleague, Dr. Thomas, in the public.
Yes, I'm okay, Dr. Ahmed.
Thank you. Next, the most important aspect of any research is the primary research problem. What is your primary research problem? Looking at your statement of the problem, could you please
Should I share screen, sir?
Well, regardless whether you share or you don't share, it's okay as long as you can read it.
For our primary, so we want to know on the impact of oil of the different structural shocks on the ASEAN 4 countries.
Okay, so what is written in your manuscript? Look at your manuscript. I believe this is on page 4.
Yes, sir.
So I guess you have to improve on this. This study aims to examine the effects of oil price shocks on the ASEAN 4 stock market index from January 2012 to October 2022. Now, another paragraph, or it should be followed by a statement. Specifically, it's sought to answer the following research questions. So you really have to indicate that you have research questions, and then you have 1, 2, 3, 4, and so on. Okay. So let me share with you in the public chat the primary problem. Okay, for you to improve it. Now, looking at your research objectives, notice you have used, abused, and misused the word identify. To identify, to identify, to identify, to identify. So 4 objectives all to identify. Why don't you try to use other synonyms? For example, for number 1, you can use the word to identify. For number 2, you can use analyze. For number 3, you can evaluate. And for number 4, to probe, and so on. Remember, in writing, you avoid using the same vocabulary twice. So it's about time that you start using your thesaurus. Now, with respect to your hypothesis, in terms of structure, I would like to suggest that you come up with a level 3 heading. So you have here 1.4 is the statement of hypothesis. Under that, you have 1.4.1, which is structural shock. And then under that, perhaps you can place 1.4.1.1, oil supply shock. and then the next group is 1.4.1.2. Okay, then followed by the next group, which is 1.4.1.3, which is oil-specific demand shocks. And then next to that, you have 1.4.2 and so on. So you have 1.4.2.1 and so on. Now, I'll leave the content for my colleague. And in terms of significance of the study, now, I suggest do not use, what's this, numbering, 1.5.1. You just discuss the significance to the oil and petroleum industry, diretso na,
Sir.
to investors, okay, to
Yes, sir.
policymakers, to, how can you differentiate under 1.5.5? You have here researchers and the academe, and then you have there another future researchers. So I would like to suggest, because the researchers are part of the academe, so under 1.5.5 is to the academe, and then next you have future researchers.
Okay, sir.
And then maybe you can add one paragraph. Why are you interested in this study, you guys? What is the significance of this paper to you as researchers? So I guess that will make more sense. Now, looking at the scope and limitation of your study, what is this? You're having there different companies, okay? These are your respondent companies. Am I correct?
Yes, sir.
Yes, sir.
How did you identify them? How did you come up with your sampling design? You said you made use of purposive sampling, correct?
Yes, sir.
So how did you choose those companies? Philippine Stock Exchange, you came up with Ayala, San Miguel, etc., etc. How did you identify those companies?
Sir, we
Um,
definitive icon, and then we filtered it out. Like the dates, it should be the company should be listed from January 2022 to October 2022. So we made
But-
sure that the date that the company is listed on all dates.
Okay. So why don't you come up with one table? List of respondent companies, rather than coming up with 1, 2, 3, 4, 5 tables. So you just combine all of this under one table. Okay, and then perhaps on the 2 columns, Philippine Stock the country is on the left. Under the country, you have the Philippine Stock Exchange. Then on the right, the companies involved. And you have Malaysia. Then you have Bursa Malaysia and the companies and so on. Okay. Now the paragraph that follows the table, it doesn't make sense there. This is part of your statistical treatment of the data, correct?
yes, sir.
So why are you placing it as part of your limitation, scope and limitation? This should be in chapter 4, methodology, particularly under your data analysis, particularly statistical treatment of the data. Okay? Now for your definition of terms, remember guys, you are mandated by the school to follow the APA style, the 7th edition. Your manuscript needs a lot of improvement, grammatically, sentence structure, etc., etc. As well as you really have to follow the APA style. Remember, when you write your definition of terms, no numbers, no bullets. It has to be alphabetically arranged. Okay? So please remove all the numberings that you're having there. Make sure somebody's taking notes, okay?
Yes, sir.
Yes, sir.
Because we will ask you to repeat at the end Now, looking at your literature, more or less, how many peer-reviewed journals have you included in your paper? Okay. To come up with a comprehensive literature review, the school is mandating the students to make use of at least 20 peer-reviewed journals. I don't think you have reached the 20 because I counted what is listed in your literature map. Okay? And your literature should be within 5 years. That's the golden rule. So I guess you still have to improve in your literature to look for more recent peer-reviewed journals to be included as mandated by the LSU. Okay? Now, with respect to the research gap, you are fond of using the statement according to the knowledge of the researchers. Remember, guys, this is an academic paper and you have to be sure 100% about every word that you write in the paper. It is supposed that you have reviewed the literature, right?
Yes, sir.
So you have to identify a research gap, not according to the knowledge of the researcher. Take that out. It doesn't sound good. Based on the literature reviews conducted by the researchers were able to identify the following research gap. It sounds more confident, right?
Yes, sir.
So
Yes.
you have to be confident in whatever you say. Now, with respect to the theoretical framework, maybe you can add a paragraph on how are you going to make use of each and every theory? How does it serve your paper? Because you're establishing a theoretical framework for your paper, and therefore maybe you can discuss briefly how does it help your paper? How is it related to your paper? Now, with respect, I'll go faster. With respect to your conceptual framework, you stated previously, is this your concept? This leads me to the question, is your paper original or is this a replication study?
Original,
Do you have
sir.
a test journal?
Yes.
Yes, sir.
Yes, sir.
So this is not an original paper. This is a replication study, correct? Gentlemen, correct? So you're replicating the study, am I correct? Hello?
Sir, we didn't really replicate the whole study since we picked 4 countries. It says here
Okay, but the original concept is coming from somebody else. So
yes.
this is a replication of a certain paper with minor modification, correct? Because you stated as part of your paper the framework made by Killian and Park in 2009. This research will use the different structural shocks for crude oil, structural shocks that will be used, blah, 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 blah. So this is not your conceptual framework. It was borrowed from Killian and Park. Am I correct?
Yes, sir.
Yes, sir.
Okay, so please indicate that as part of honesty, intellectual honesty. Okay, when you discuss your conceptual framework. In addition to that, please indicate that your paper is a replication of blah, 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 whatever this journal you're having.
Yes, sir.
Okay,
Yes, sir.
this is to help you to avoid plagiarism. At the same time, this is for intellectual honesty. And with respect to your chapter 5, APA, you don't use Roman numbers, by the way. With respect to the paging numbers, page 1 is counted. So page number 1 starts with the title page. So please rearrange and correct accordingly. It's your research design. You did not talk about your research design here at all. What kind of research design are you employing in this study? Is it correlational, causal, etc., etc.?
It's more on, sir, on correlational, since we're identifying the relationship of the on how the oil price are affecting the stock market.
Okay, you decide on your research design, and please make sure to be very specific. Sampling design, I already discussed this. You will be making use of monthly data for 10 years. You will be analyzing monthly data of 10 years.
Yes, sir. We kind of aligned it with our base journal because our base journal did a monthly.
Okay. My next question is, do you have the data?
Yes, sir. We've already checked the icon
Icon
terminal,
terminal.
and
Did you download it?
we haven't downloaded yet, sir.
Okay, please download it and place it in an appendix at the end of your paper. Dr.
Okay.
Thomas, thank you. I have no further questions.
Thank you, Dr. Ahmed. Guys, here are my comments. No, number one, can you please take a look at your paper?
Yes, sir.
Okay. Yes. The one you put there in your hypothesis is not correct. No. Can you please look at your paper now? Okay. On page
5 posts.
on page 6, no? Okay, you put there Philippine Stock Exchange. Now, your paper, if you look at the title, is on the stock market index, not the stock market. Correct, guys?
Yes, sir.
Yes, sir.
So, therefore, it should be impact on the index of each country, not the exchange. Correct?
Yes, sir.
Yes, sir.
So you have to change that. No? Number 2, you put there the Thailand Stock Exchange, right?
Yes, sir.
That's wrong. The formal name, you did not even check. The actual name is Stock Exchange of Thailand, SET. You should correct the name.
Yes, sir.
Yes, sir.
Okay, there's no such thing as Thailand Stock Exchange. It doesn't exist. The actual name is Stock Exchange of Thailand. Okay. Now the other one on the list you have, okay, okay. So now again, I asked same question with Dr. Ahmed. How did you choose the 10 companies per country? What criteria do you use?
So, sir, we gathered, sir, the company. So we checked. So we checked from the year 2012 to year 2022. So we check the icon if there are available data, because if there's no available data, then we can't continue with this. So we check. So we gathered the companies checking if there's an available data from January 2012 to October 2022. So,
That is your only criteria?
yes, sir.
Yes, sir.
Okay, that is a wrong way to do that. Number one, let me ask you. For example, are all the companies, are they in the index? Because you're talking here of the index, right?
Yes, sir.
Yes, sir.
Yes, sir.
So are they part of the index or not? You don't know. Number two, well, it's correct now. You check whether they have data. That means that they are existing during that entire time, correct?
Yes, sir.
Yes, sir.
Number three, what is your criteria? Are they the top 10 companies there in each country, or what ano bang meron? For example, yeah, you have different industries, different sector. What is the criteria? Kasi when you make a study, you should have a criteria. Hindi pwedeng bara-bara. You just choose anything. No, it cannot be. You have to set the criteria why you choose these companies in this, because there is financial sector, real estate sector, oil and mining, and then meron ding ibang sector, no? So, what is your criteria in choosing these companies and why these sectors? And also, because in each country, the sectors differ. There are some sectors, for example, in Indonesia that are not in the Philippines. The sectors in Malaysia, then they do not exist in the Philippines. So what commonality then would you have in choosing the 10 companies in each country? You should come up with a commonality, no? Guys?
Yes, sir.
Yes, sir.
Hindi pwedeng just random, no? There's no such thing as random because you're doing a thesis. You're doing a study. Therefore, it is your responsibility as the proponent to choose what are the reasons why you select these companies. It cannot be, sir, we just want to pass the course. Eh? That's not a reason. Guys, you're
Yes, sir.
supposed to be researchers. Researchers you should look for a reason. For example, you have gone through your review of literature, right?
Yes, sir.
Yes.
Now, I'm sure you notice that in the selection of the companies that they choose, the criteria is set there in the paper, correct?
Yes, sir.
Yes, sir.
Oh, you should follow the same thing. Hindi pwedeng, sir, because we just want to pass the course, we just choose any company. Basta the data is there, that's it. No, you cannot do that. You have to set the criteria why you choose those companies. Now, the complication there is that, as I mentioned, for example, in the PSE, you have financial, real estate, etc., right? And industrial, right?
Yes, sir.
Sector. Okay. For example, as I mentioned earlier, there are sectors in Indonesia and Malaysia which do not exist in the Philippines. For example, there's in Indonesia, in Malaysia and Indonesia, there's called the health sector. Yung mga hospital,
Yes, sir.
wala sa Pilipinas yun. They're not listed, correct?
Yes, sir.
So, then therefore, the criteria in the 4 different countries would obviously be not one. So find a commonality wherein, let's say, they are the top 10 in terms of revenue, in terms of net income, in terms of whatever, market capital. Di ba? You understand market capital, guys? Ibig sabihin
No,
noon,
sir.
meaning to say the stock price of the company times the the number of shares, because in its, for example, in the PSE, no? Example lang, so you guys will understand easier. For example, in the PSE, in terms of market capitalization, I mean to say the stock price of the company times the number of shares. So, for example, one of the biggest companies with the market cap is SM, no? SM Prime, for example, no, or SM Investment. They're over 1 trillion. So, mamimili ka doon, then you choose those with the, kunwari, if that is your criteria, or it could be in terms of sales, no? For example, in the sector, they are the top in the sales. No? For example, for the banks, BDO is the biggest in terms of asset, etc., whatever. No, you guys understand me?
Yes.
Yes, sir. Clear po.
So you have to determine what would be the criteria in choosing the top 10. It cannot be, there's no basis because the data is there. The data is there. That means to say that those companies exist during that period, but there should be more. There should be more criteria as why you choose the 10 companies. As researchers, that is your responsibility. Remember, because you in your hypothesis, you want to look at the impact, correct, of oil price shock, right?
Yes, sir.
So the next question would be, why these companies? Diba? For example, you choose Jollibee. Why did you not choose Max Fried Chicken, which is also listed? Diba?
Yes, sir.
So, kung kunwari, ako nagtanong na, ang sagot nyo, why did you choose Jollibee instead of Max? You see, now you have a problem, correct? For example, BDO, why did you not choose BPI? Right?
Yes.
Guys?
Yes, sir.
Yes,
So,
sir.
well, one reason could be because BDO is the biggest bank in the Philippines in terms of asset. Okay? So, you must have a reason why you choose these companies. Para in writing your conclusion and your results and conclusion, you want to focus even in introduction, you want to see the impact of the oil price shock on the biggest companies, let's say, in each country, the stock market. Because siyempre, if they are the biggest companies in terms of sales, market capitalization, then they have a big impact on the national economy of this country, correct?
Yes.
And of course,
Yes,
also
sir.
on the stock exchange, the investors, right? Kasi, siyempre, if they're the biggest or some of the biggest, then there will be a lot of investors who put their money there. They will be impacted. So that is a logical reason. So I suggest you maghanap kayo ng dahilan kung bakit ko ano. And then if you need to change some of the companies, then you just ask approval na lang with Dr. Ahmed. At least may rationale as tinatanong din Dr. Ahmed kung why did you choose those companies? There should be a reason why, no? In terms of biggest sila in terms of sales or net income or market cap, whatever the reason, no? So at least mas logical yon rather than kasi namili ka kasi data. Okay? Aside from the availability data, there should be other reasons why. So that when you come to your conclusion, may impact ba o wala, di ba? Then the impact, why are you focusing on the impact? For example, I'll give you an example lang. Let's choose a very small real estate company. Kasi the real estate biggest Ayala Land, right, guys?
Yes, sir.
Yes, sir. Ayan.
Okay. And if you look at the PSE, there's also a very small real estate companies. Very small lang. This is around $1 billion or so lang yung market capitalization nila. Okay? So, it's very small. So, parang you're comparing one very small and another one a giant, right? So, if you study the impact of the oil shock on the Ayala land, because they build structures, diba? Buildings, horizontal, vertical, then the oil shock would have an impact because the construction cost will go up, right?
Yes, sir.
And it will be harder for them to sell, right?
Yes,
But
sir.
the impact on a giant Ayala land versus a very tiny listed company lang, the impact is different. You guys understand what I'm trying to say?
Yes, sir.
Yes, sir.
Yes,
Okay,
sir.
for example, in the video, malaki siya versus another bank is listed very small. So the impact is not the same. So I believe what you wanted to, for example, you're looking at the aggregate demand, correct? Diba? So
Yes.
in short, you're looking at the big picture. So the big picture, syempre, yung the mga pinakamalaki, the biggest companies, right?
Yes, sir.
Correct?
Yes,
Sir.
For
sir.
example, let's say, ano ba yung malita pizza? Can you
3M.
name it? Huh?
Pizza
3M.
Hut.
Okay.
Yes, sir.
Hindi, 3M. 3M pizza is very small. So for example, 3M pizza, what is the impact of the oil price shock to 3M versus Jollibee, which owns Greenwich, correct? I mean, di ba?
Yes, sir.
Yes, sir.
Correct?
Yes,
So
sir.
Yes.
that your conclusion would have yung one correction between your results and what you want to find out, the shocks, no? Right?
Yes, sir.
So aggregate demand and specific oil specific demand, for example, let's say in the list that you have, meron ba kayong oil company dito? Do you have Petron? You don't even have Petron.
Yes.
No, sir.
No, sir. Kasi
Yung data po nung Petron is not present for in between.
You have a problem with
22.
Petron.
Yes, sir.
How about Phoenix Petroleum? Right? Or in Bursa, Malaysia, you did not even put the national oil company. Or Indonesia, Pertamina. There's no Pertamina here. There's no oil company. Right? So the question, although you have Adaro Energy, no? Okay. So since your topic is about energy, shouldn't it be logical to have energy companies?
so,
Kasi dito,
sir, I'm sorry.
dito kasi nakalagay dito, oil specific demand. And then oil, aggregate demand, oil specific demand. Yeah, yun na yun, no? And the aggregate demand, no? So oil specific demand would be affecting those companies that are very heavy in using oil. For example, like well, San Miguel is, let's say airline, yes. Universal Rubina, yes. Banks, well, they do, but in terms of energy footprint, not that much. Huh? Equity, Aboitiz equity probably could be more of the Aboitiz power. Although Aboitiz power is part of Aboitiz equity ventures. ICTS, yes, they operate terminal, but so they don't. Well, they do use energy, but not those heavy, yung malakas na kwan. You did not even put their Meralco or the energy company, like for example, San Miguel Power, Aboitiz Power, and yung mga those generating energy companies. So the question there, is there should be a rhyme and reason why you choose those companies. No, I'm not asking you to change the companies all, but I'm asking lang there should be a rhyme and reason why you choose them. You guys understand me?
Yes,
So
sir.
that
Yes,
in answering your hypothesis, there is no impact of oil specific demand shock and the Philippine Stock Exchange. Kasi if you put the stock exchange, nasa na yung index sa title nyo. Correct? But if you choose naman, pag nilagay mo index naman, then the stocks that you choose should all be in the index, correct? Because if they're not, because you can be a stock and not part of the index, correct?
Yes.
So if they're part, because in the companies in the index, they change over time. Pinapalitan yun eh, tinatanggal, ina-add, etc. But at least they should have been part of the index at one time or another. That would make more logical sense, correct? Because if you put there the exchange, then it conflicts with the title. Unless you remove the index in your title. But if you remove it, how do you now compare? Because the only way you compare would be the PSC index or the PSC composite, no? Also an index. Now, when you're referring to the stock market index, are you referring to the PSC index or PSC composite index?
More on, sir, we're referring to the PSE index.
Okay. The difference between the two, PSC index only composed of 30 stocks. The PSC composite index is composed of almost 400, no? So in Bursa Malaysia, again, is the Kuala Lumpur yung nila, index nila. Indonesia, JS yung JSI index, no? So magkaiba yung composite and the so if you looking at the index, then let's say it's Jakarta index, no? Or the Bursa Malaysia index, so you should be very careful na hindi yung composite ang pinili nyo, kasi sa PSC pinili nyo yung 30 stocks lang, no? And then comment ko lang dito, dagdag dito would be can you go to your conceptual framework? Page 24. Do you see it now?
Yes, sir.
Ang suggestion ko, gawin nyo lang IPO na lang, input, process, output. Dagdagan nyo yung gitna, yung process, which is the methodology to use. You can just ask your advisor na lang, no? Yung IPO, input, process, output. Tama naman yung dependent, yung process lang sa gitna. Ilalagay nyo yung methodology yung ginamit nyo.
Okay.
Para kompleto. Okay? Para
Yes, sir.
ma-improve yung paper nyo, no? And then, after this, dapat when you go to your final defense, pag nag-submit ka, dapat ngayon future test, will, tama? It should all be past tense lang because by that time, you're done, right?
Yes, sir.
Yes, sir.
So everything should be past tense. And as Dr. Ahmed mentioned, you should be using APA 7. Because you have many revisions here, no? No, at least there's direction. Okay, so you should look at your citation dito using the APA 7, no?
Yes, sir.
Yes, sir.
Okay. For example, can you go to page 34? I'll give you an example. Page 34. Do you see it now?
Yes, sir.
Yes, sir.
Oh. The first citation is Arampat Zidis, Dergiades, T, then Kaufman R. Where is the first name of Arampat Zidis? Nawala. What's the first name? Correct? Do you see it?
Yes, sir.
Yes.
Look at the second citation. Aziz is all capitalized. MIA and Dahalan, J. Why is it all capitalized? Number 3, you go to the third one. B period, comma, and Paul, comma, S period. What is B? It should be a full name, right? Full last name and yung abbreviation ng first name. Then the fourth one, Bastianin, comma, N, Manera, comma, M. Where's the first name of Bastianin? And then you click capital. How does stock market volatility react to oil price shock? Why is it all in capital letters? For your other citations are not. And then you go to the 1, 2, 3, 4, the sixth one. Ben Bachir. You see it?
Yes, sir.
Comma,
Yes.
S period. Then there's no comma. Then Harit, S period. So there should be a comma after S, right? Then Harit, comma, S period. Then there should be another comma before. I don't know how to read this. Charibi, right? Then should be comma, then A period. So it's all full of mistakes, no? And then you go to the next one, Chen J. Okay, June 13, 2022. Then Chen, comma, J, August 19. They're not aligned. They should be aligned. And then if another one, Chen J, also July 7. They're not aligned. Do you see it, guys?
Yes, sir.
Yes, sir.
You're not supposed to by the way, one other thing, you're not supposed to cite from Investopedia. You should remove this. I don't think Dr. Ahmed, isn't it correct? They're not allowed to cite Investopedia, right, Dr. Ahmed?
Yes, Dr. Thomas. The school is mandating all students must use peer-reviewed journals that they can obtain from, I think, 84 or 85 databases that are available online from the
Okay.
LSU libraries. Thank you.
Yes, thank you, Dr. Ahmed. So guys, you should remove the Chen. You cannot cite Investopedia.
Okay,
Yes,
sir.
sir.
And then you look at the next one, Diane Kral. The last name should be first, and then comma, Kral, comma, D, right? The first name. And then you see the next one, Lydia Raja. Okay, it should be Raja, comma, L, period. And Kasipilay, comma, J, period. And then also, if you look at the citation, the one in Chen, for example, although you're going to remove it, it's italics. What is the stock market, blah, blah. But in your Kral and then Kral, low oil price shock is not in italics. So you should use APA 7. And then if you take a look here in Gambetti, the next one is Glen S. There's no year, just this period and then blank. And then unit root simple, blah, blah, blah. And then, okay, you should remove the one of Hayes also, Investopedia. You should look for journal. And then the one of Huang again, okay, and then the next one is Kilian, comma, and then Park, comma, C, period. What is the first name of Kilian? Please revise all of these, huh? Do you
Sir.
guys still have coursework or thesis na lang?
Thesis.
Thesis na lang po, sir.
Okay, so then you have all the time in the world. You guys
Yes, sir.
revise it na lang, no?
Yes, sir.
Okay, so that's all for Dr. Ahmed. That's all for my comments. Huh?
Okay, gentlemen, could you please pause the recording? I would like you to, I'll be sending you again to the waiting room in order for us to deliberate, and I will bring you back after a few minutes, okay?
Yes, sir.